Good morning and welcome to the pre-market analysis on Saturday, the 5th of April, 2024, 25. I don't know why I keep saying 2024, 2025. Thank you for turning up. I don't suppose there'll be many people in here this morning watching this, but we'll give it a go. Let's look at where we're at this week. So in terms of terminus downside, I had to rethink the terminus. And I know it's after the fact, but you go all the way back to this weekly. There's a weekly candle back here. We actually hit within 2 or 3 handles of the mean threshold of that candle. I didn't call that. I just took the price leg down, and that's how close we were for picking the next price leg down. We're out by 32 handles. That's pretty close. On a weekly perspective, being out 32 handles, not too bad as far as I'm concerned. So that's how the week ended on the low at 17,387. And if you actually look at a weekly chart, you'll see that lines up. I'll get some old Russell's birthday. Run to May. I think it was on this one here. Yeah, see how this mean threshold of this candle right here? Look at the price right here. Mean threshold somewhere around there. 387 and 3 387, right on the money. So that's the I can see why it stopped there instead of hitting my terminus. So it sounds like a logical place to get a nice little kick off of. I like that. So we're going to be adjusting where if that was the precision on a weekly level to retrace back down to, I've got some ideas about where I think price will go next. So let's delve into some of that. On the daily level, okay. So if Sunday we gap up, come back down, tap this low, and start to move ourselves back up, I'm looking for 18,097, 18,097, in around that level. And then I'm looking for either a reversal on the 4 hour, 1 hour for continuation on the downside, or we come back inside this range here, looking for 50, 62% inside this range here. If you take the low to the high of the swing, you're looking up to institutional order flow entry trail for a rollover, come back down, or 62%, so on and so forth, and just kind of climb your way up. Just get my mic over here. Climb your way up that wall here. Now, if you take the levels, Let's see if there's two of us in here. Whoever's in here with me, welcome, welcome. It's just you and me, kid. So let's build this as a return back into this range here. If we look at this as, if we keep this low here, I'm just going to dig down now and start seeing if we've got a reversal going on here already off that nice little weekly mean threshold order block. Let's go down to the 4-hour chart. Don't get anything there. So in order for this to go bullish, we got to get back above this 50% level. Okay, so we'd have to be above here on a 4-hour. That tends to overlap with the weekly. If we get above that in this candle here, I'm looking for this to come back deeper into this range. I'm looking for these highs to get taken back into this order block here. And see if we can't find some support off of that and start coming back lower. So I'm definitely looking for a run back inside this range. That's a 4-hour chart. So let's look at the 1-hour chart and slowly kind of just whittle our way in here and see when we see a reversal, if there's a reversal that's occurred already in the market after hitting our weekly objective. So you work from the top down and you're just hunting for, if a weekly objective is hit, we look on the daily. Do we have a reversal on the daily? Obviously not right now. 4-hour, 1 hour, and we just slowly work our way down like that and say, do we have that potential for the turn right at the exact spot we expect the market to freeze up on? Watching from South Africa, welcome, welcome, welcome from South Africa. SQQ, me here too. Oh, excellent. Welcome, welcome you guys from South Africa. I wish you all the best. I hope everything's safe down there. I hope you guys are healthy and happy. Hope things are going well. It's good to see you guys. All right, so we've got the 1 hour. So now let's see if we can't start working into the, right now we have no reversal on the 1 hour. So now we've got to whittle down even more. So you can see how that weekly objective right now has not been validated as a turn point yet, but as we whittle down, you'll start to see closer. So let's go to the 15-minute chart. And we've got upside objectives. We've pulled the holes out of the wall, as it were. So this rock face we want to climb here, we want to see specific levels that want to provide support for us to continue going higher. So you pull out these specific levels out of the walls and you think this is where you want to get. If you're going to climb this, this would be the foothold you're looking to get for the market to validate going higher. So we've been on the weekly. We found this is the weekly objective is hit right there on the money. That's that mean threshold line in the sand for a little return back into the range that was created last week. We have checked the daily, nothing, 4-hour, nothing, hourly, nothing, and now we're down into a 15-minute time frame, and still there is no reversal yet. Okay. We have a bear trap here, small little range. We did trade above it right there, but we're all automatically in the premium portion of that small little range anyway. So if you were looking to get in on that, you'd have to get down here. So it would have to have traded above that, come all the way back down into that level, catch it for a run to rejection block, pay yourself. Always pay yourself at rejection blocks, you guys. Always pay yourself at rejection blocks. If you don't, you're looking to get your ass handed to you every time. Not every time, but a large percentage of the time. If you don't pay yourself at rejection blocks, right here, we don't get a high taken. You don't get a high taken. High doesn't get taken. High doesn't get taken right here. Just keeps failing right at the rejection blocks. So it's important that you make sure that you pay yourself at those places. So 15-minute, we've still got nothing on a 15-minute chart that gives us an indication that we're going back into the range again. Okay. So for us, we want to see this premium array because we're inside this range. So you pull your fib tool from high to low here. See 50%? The upper half of that SIBI and the lower half of that SIBI all make the premium and discount array inside that range. So you'd have to be up above that, come back into this, run to the high of it. So you want to trade, you'd be trading inside this thing for 15 minutes, try and catch some profits out of that. Nobody wants to play with that. So what you're looking for is that this candle here, its mean threshold, it's been validated. So its mean threshold holds price. We start going higher, trade through this level, come back into it, find support, and then look for this candle's mean threshold to get taken to the upside. We get a body above here. So what you want to see is a bold candle. Wait a second, there's commercials going on here. We'll get rid of those. It may hit the top range next week. Yep, it could hit the top of the range. Depends on what range you're looking for, what time frame you're in. So SQQ, you got to tell me what time, or triple Q, you got to tell me your time frame. When you talk about weekly, the next week range, or the range next week, what range are you talking about? This is a range, 15-minute range. So what time frame are you on? Anyway, so I want to see this mean threshold of this candle. We haven't really got a body above it yet, so, but it has been validated. I'd like to see that hold price and start to move higher. We want to see this kind of thing happening. I want to see price go like this. I'm gonna turn this into a candle so you guys get the idea what I'm looking for. I don't want to look at that. I want to try, if I'm going to kind of create something here for you guys so I can teach it to you easier. We're going to say up candle is going to be a nice bright orange yellow one. Oops. Border black background, nice orange. So make it nice and bold. Okay, so that's going to be my sorry, I'm just trying to get something so when I actually do this, you can all right, so that's the up candle. I want to see this kind of thing happening. If we gap up, I want to see us stay gapped inside here, and then I want to see this candle here go up. And then I want to see this kind of thing happening. I want to see I got my candles. So I want to see this. I want to see it go up. And then I want to see it come back down. So I want to see a fair value gap close above this level, this candle here. And then I want to see it come back down. And then the next candle, I want to see this kind of thing happening. Up candle. So I want to see it gap up, run through this level, create this fair value gap, a wick. I want to see a wick come down, tap this, or just give us a wick into this area here, leave this open all the way to the consequent encroachment of this. So you'd almost want to see, I can line this up almost identical to what you want to see here. So you want to see that go like there. So that's kind of like what the next 3 15-minute candles I want to see. I want to see this gap up, run higher, come back down, and if the wick just taps into 17,870, 50, just tap that and then go higher. Or if that freezes there, the wick, either one of these two wicks comes down into that level. I do not want to see the mean threshold at 17,779 get taken on a close. Come down, tap it, and then go higher. That's a graded response. So I'm looking for a graded response off the top of this candle here for a market structure shift, and then a continuation to the upside. And then I'm looking for premium array inside this whole range here. We're getting right back up into our areas that we're looking for up here. So that's ideally what I'd like to see. So so far we haven't seen that. So when we're going back to our weekly reversal, we've hit our weekly mean threshold. This is the kind of thing I'd like to see. But so far we haven't got confirmation that we're heading in an upwards direction. That's a 15-minute chart. So if we continue to dig down into the 5-minute chart, I'm starting to see a reversal. And hopefully you guys can see that too, based on our teachings every morning. We're starting to see a 5-minute reversal right here. And I don't have a 5, so I'm just going to put on there as a 1 minute. Okay. So far we have a bear trap or a bull trap occurring on a 5-minute chart. Okay. So what I want to see again, this kind of setup that we've just talked about here on a 15-minute chart, I want to see that right inside here. And there's no swing here. So this candle here becomes important for me. If we just come down tomorrow and we give this a tap and start going higher, I want to see us get above this level, use it as support to go higher. If we gap up and we continue to run up, whatever candle is created here, I want to see that continue to march. Whatever one it finally takes out, if it takes out this array, this array, this array, the very last one that it takes out is the one I'm interested in catching it for a long. So far we still have we have a reversal right here. Body trades above it, we come down, and now we're looking for this to go higher. We're inside the range, so you're above 50% of this small. No, it's not even a range. You've got to go here. So this has to start getting back into 50% of this area right here. So we're looking for a run at least to here. So if we gap up here and then continue to climb up and leave that open, I'd be looking for a retest of this old high here, which is what we're talking about in the terms of the wick. So we'll see where this one opens tomorrow. But right now we've got a slight change of direction. No reversal, we do have a change of direction. So if we trade back through here on a close, we're looking for range extension, and we're actually going to keep coming lower for the time being. I'm just looking at that as a higher time frame objective that we've hit. We're looking for any opportunity for a reversal now. So we're down to a 5-minute chart, and so far we have not seen we've finally seen one indication of a change in direction. And it's at full run up into this order block. I like the fact that we've got through the mean threshold. So if we come back down and tap this, we look for some higher prices. You'll see that if this was the low of the week that we've created, and the next week we're going to start to trade back up, just make a note that I told you about it right here on a 5-minute chart. You're seeing it right here is the start of the turn. Now let's go down to a 1-minute chart and see if we can find it on a 1-minute chart. So on a 1-minute chart, much more obvious. Here's your 1-minute chart. Here's the reversal. I'll make it a slightly different color because it's give you an idea of what it looks like. We'll send it in the back so it's not in our way. All right, so there's your change in direction. Okay, we've taken out an old low. This is the range that you're in. If you pull your fib tool on that from low to high, you'll see why. Again, we teach this every single morning. You'll see why these are very important levels. So inside this small range here, as soon as we get a body trades above it right here, that gives me the indication that the algorithm is now changing directions inside this range. We have not got a structural break yet. We just have a change in direction. So as we break through that level on a close and we come back and we tap it, we're looking for a long right there. And again, this is all hindsight. It may seem like hindsight to you, but this is what we teach you every single morning, live. Before it happens, I show you this, what we're looking for. So that's the thing we're looking for right there. Reverse, our change in direction, come back, validate it, and we're below 50%. That way we're buying it at a discount. And we're going to sell it at a premium. So if you're use my fib tool technique, which is just simply trading internal range liquidity and reaching for the higher time frame, or sorry, the higher part of the range using the fib tool is pay yourself half at 50%, 62%. You just keep taking 10% off and bumping your stop loss up accordingly. So if you entered into here, your stop loss would be sitting just down below here because you don't want to see this trade through here on a close. Fail-safe's important. If you haven't looked at my fail-safe video, watch the fail-safe. It's important to have not only a stop loss, but if you understand price action well enough, you'll know that we do not want to see a trade back through this inversion on a close. If it is, our stop loss, which is sitting down here, we're closing it out long before it takes us out. Okay? So your entry is here. As soon as it gets to 62%, and I'll just put this retracement tool on here so you get the idea of what it looks like. There's 50%. So you're just below that. You enter in below your 50, so you get your discount. We're looking to run higher. We run higher. As soon as we hit 62%, stop loss moves to 50 plus the cost of your trade. So you pay yourself. You're a stress-free trader. Take 10% of your trade off right there. The next one, as soon as it hits 62 or 70%, you move to 62. So your stop loss is sitting here. You hit 70%, take another 10% off. If it goes to 75, another 10%. If it hits 79, another 10% comes back and takes you out. So as you go higher, you're also bumping up your stop loss behind it. So you hit it right there, it comes back, takes you out. You've got from 17, you bought just down here below the 50%, 17, we'll say 17,454, and we unloaded all of our position, most of our position right there at 91. So 40 handles. You got 40 handles out of that just in 3 minutes. I don't know about you guys, but 40 handles is pretty awesome as far as I'm concerned. We have the next level right here. As soon as a body trades above that level, we look for this level to provide support and keep going higher. And then we want to see a range extension. In other words, we want to see this mean threshold give way, and I want to look for the last premium level. So this is the premium level box to box trading. If we close above it, we're looking for this to go higher. So you can enter in off of this one here. So you've got a retest of that level right there, going long again, paying yourself at mean threshold and rejection block. Pay yourself at the rejection block, rolls over, we get another change in direction. So now you can close off your long trade. So you've traded this internal range liquidity, you've bumped it twice, and you got paid twice, and you got paid at rejection block. And actually you can take yourself at the high as well, but you've got paid right there. You see this reversal starting to happen, change in direction. Watch right here. If we get a body that trades below this, we look for any retest of this level to go lower. So right here, trades below it, we trade back up into it multiple times, and now we start to trade lower. So we're looking for it to take out this level and start getting back into this one and this one. So back inside this range now, you pull your fib tool inside here, and we're looking for 50%. Strangely enough, 50% of this range lines up right with our discount array again down here. So if we can reach into the discount array, reverse and go back higher, again, that's what we're looking for, is that weekly objective to continue going higher. So if we come back into here, retrace, and then go higher, you've got a 1 minute chart now that you've been able to trade off of this reverse on a weekly level, and you're looking for that to start going higher. There's the reversal. You catch it, trade back up inside here, pay yourself according to what I just showed you, reverse, and now you're in this direction. Stop loss was here, and the moment you break an old low, you can move yourself to break even, zero stress trade, and let it trade back inside that range. That's a quick liquidity run, learning how to grab quick liquidity. Okay, internal range liquidity. You may not be an internal range liquidity hunter or super sniper. You may not be a multiple trader. This, what I'm showing you here, whatever time frame you prefer to trade on, that's the time frame you can use this exact same setup. Any setup that I give you is a fractal setup. In other words, it occurs on all time frames, all asset classes. No matter what you trade, follow this rule, and I'll guarantee you, you'll get awesome results with your trade if you follow internal range liquidity like I'm just explaining here. It works amazing, especially the fib tool technique I'm showing you here for an internal range liquidity. If you overshoot and you do not use your fib tool, and you do not know the small little ranges that you're in, if you try to say, oh, it's this whole range here, when it could be this little range here, there's a swing there. You got to treat that first one. If it goes past that, you got to treat that one for the larger range, the larger range, the larger range. Don't assume that it's always this big one. If there's swing points, you use those as data points, and then you trade accordingly. So if you pull the large tool, look for 50%, it brings us right back inside that level. That's a 1 minute chart. Okay, I'm going to even go down to a 30-second chart and show you the same thing again, that this happens on all time frames, all asset classes, no matter what. Here's your reversal. So on a 30-second chart, we're looking for this. And if you're super sniper, you say, as soon as I get a body, trade above this level, I'm going to take this on the long. Stop loss will sit down here. Body trades above it, you get back into it, and you start to trade higher. Internal range liquidity, box to box trading, you'd be trading all the way up to this level right here for an internal liquidity pump. Actually, you go all the way to the top of that right there. So you enter in here, you go for this whole run all the way up into pay yourself here, pay yourself at the second level, the third level, and then if it closes above it, we're looking for this to go higher. Right now it's retracing back into this range, but I'd expect that to go higher now that it's already extended the range. It's extended the range, so now you got the reverse. So go back to here on a 30-second chart, you'll see same thing again. There's the reversal, the change in direction. As soon as you see this, a high taken, you look for this. As soon as that change of direction occurs, you trade back into this fair value gap here, or this fair value gap here, which is now an inversion. Use that for support to come lower. You're coming inside this range. From there to there, pull your fib tool, 50%, 62%, pay yourself accordingly. And as soon as you're out of the trade, you're out of the trade. Or pull from there to there and use the fib tool again. So this is a golden setup that you guys can use on all asset classes. And I'll show you this on any one of these. I've got dozens of different assets here, from commodities, metals, minerals, stocks, bonds, ETFs, Canadian, American, doesn't matter. Doesn't matter. What I'm showing you here is an absolute bomber way to trade markets. Okay. So that's a 30-second chart. How many people actually trade a 30-second chart and look for reversals? Anybody tells you that 30-second charts are just too noisy, nobody can trade on a 30-second chart, it's impossible, don't know what they're talking about. It's totally doable. I got a guy on my in our group that loves 30-second and 15-second charts. He enters in on a 15-second chart. So anyway, it's amazing stuff. So let's look at, so right now, when we take a look at the overall perspective on NASDAQ, we've done a run down to a level, on a weekly level, that we're expecting to see a return. And right now on a 30-second chart, a 15-second chart, I'll show it to you on a 15-second chart right here. Reverse, change in direction, right off our level here. 45 seconds later, after hitting the downside objective we're looking for on the weekly level, you start to see a change in direction. You go, ooh, stop loss sits down here, trades above it, comes back into it multiple times, and then starts to leave. So you would have caught 411 all the way up to taking out old highs. And if you're doing box-to-box trading, this is a box, larger range. There's one box, there's another box, and look at this right here. This is my box-to-box trading. Watch how accurate that is. Boom, right to the money. The high on that candle is 52875. The high on this candle, 58275. You can't ask for more precision for box to box trading. You enter in here, inside this box to box trading, you've literally got zero drawdown, or if you entered in there, you'd have that kind of little drawdown. 412 to 5, there's 120 somewhat handles there. 117 handles. I don't know about you, but that's a 15-second chart. 117 handles would do most people for the week. And I just gave you there with precision. That's the kind of precision we talk about every day. We give you the setups before they happen, and we give you the sometimes I'll actually take the live trade in front of you. I do my own trades down below where you can't see, but I will give you these setups every day. Every single day I will give you the setups. And if it helps you, no, the whole purpose is for me to give you the setup. The whole purpose is for you to understand price action and look for a level of precision that you've never had before. Anyway, that's a 15-second chart. So it happens. My goodness, could we do that on a 5-second chart? Is it possible? Who the hell trades a 5-second chart anyway? All right, here you go. We hit our objective on the weekly level right here. There's the reversal. Boop. You tap it and off you go. So from 399, you caught that stop loss is sitting down here. How many people have a stop loss that close? Like 10 handles away. and you caught that, and you're on the run from there. That's a 5-second chart, you guys. Not saying that you can get your 5-second chart, but if you're savvy enough to understand what it is that I'm showing you here, you say, yeah, that doesn't work on anything else, though. That doesn't work on any other asset class. Try and do that in Bitcoin, Darren. Impress me in Bitcoin. All right, let's go to Bitcoin. So let me just finish off here first, then I'll go over to Bitcoin and show you this stuff works everywhere. Absolutely everywhere. It may be the top of the week. 18,600, thanks. 5:15, 1 hour, same. Hi, what is your dip point for NASDAQ? It is dumping like crazy. Ali, dip point, like where's the furthest it could go down, is what you're saying? Well, we've already hit the weekly dip point that I put down last week. So do I have a further one? Well, your next one is your monthly. That's the low on the monthly. So we could still run these lows out below you here, Ali. I'm looking for a reversal off this, the weekly now. So if you take the wick here on the monthly chart, and you split that into quarters, look what we hit already. 383. It's also a weekly chart. Bottom of that mean threshold of that last weekly candle we talked about, it's also 50% of this wick. So if that's the bottom that we're getting right now, I'm looking for that reversal right off the bottom of that. So we could push down if we do decide to keep driving back. So in other words, if we blow through that discount array on the downside, use it for support, we're looking for this 218 below us. And if we get, and after that, you better be pulling a fib extension tool to find out what your standard deviations are, or go back to a higher futures and forget the contracts, go into the continuous futures and scout out some downside on the weekly, monthly, if that makes sense. So right now we're just looking for this kind of thing to happen this week. I'm looking for market structure shift here. We've got a turn on a 1 second, 5 second, 15 second, 30 second, 1 minute, and 5 minute. We've got reversals. Okay, 5 minute has shown us right now we're in a potential bear trap, or bull trap, sorry, a bull trap scenario. So if we get a retracement back into here and then a continuation to the upside, I want to see us gap up away from this. I don't want to see us gap below and come back in. All bets are off going higher until I see a market structure shift on one of these higher time frames, 5, 15, 1 hour. If that helps. Yeah, about 100, 160 points away from that low in of the month. So when you're looking at, let's go to Bitcoin just to show you what I'm telling you is not crazy. So we'll start over here on a weekly chart. And you'll see this low right here. And I'm not custom form fitting it, because if you're trading on a weekly chart, you're looking for a low to get taken out. That's the rules. So you got to make sure you establish the rules and you write these rules down. What's my setup? Write them down. If you don't know the rules inside your head 100%, and you don't know how to stay in price action, you are going to be subject to the whims and turns of the market on a dime, and you're like, where did that come from? I just got taken out. If you don't have a stop loss that's in place to protect you at half, 1/4%, 2%, whatever your risk tolerance is, if you don't have that set on your chart as a go, no go zone, that's your, if it hits me, if it quickly snaps back against me and takes me out for some unknown reason, the manipulation occurs in the market and takes me out, that's how much I'm willing to risk and how much I'm willing to lose. But the fail safe is your ability to be able to recognize where the market is acting right now and where you see it's changing directions, and it's going to come back and get your stop loss. Close your stop loss out before it hits you. If you don't understand price action well enough to do have a fail safe, then you are constantly going to throw your stop loss in there, and then you're going to be doing this, hoping that it doesn't come back and take you out if you're not absolutely sure of where you think it's going. And that's what we try to bring to your level of analysis in the mornings on the show, is trying to bring that kind of a level of analysis to your understanding of the market, so that when you make those decisions to enter in, that you've got a strong commitment to going in the direction you want to go in. Anyway, I'm belaboring my point here. Here's the weekly chart. And I'm going to take this all the way down to a 1 minute, 15-second chart, whatever you want. This setup occurs on any asset class, anywhere that there's a algorithm that runs the market. You don't have to believe in algorithms. I don't care if you don't believe in them. I know there's an algorithm. I see it. And we've got a level of precision that's you can only get from an algorithm. You cannot get from just random candles. So anybody out there who's telling you that it's just random, there is no algorithm driving the market, it's bullshit. A complete bullshit. So anyway, here's your reversal. So on a weekly chart, you say, if I see a low get taken, I look for this. I'm starting to set this up. So back here in November 14th of 2022, for example, you're going, ooh, look at that drop there. We've taken out these lows here. If we get a trade above that level in the next few weeks, I am going to be all over that. So I know a week goes by, you're on the 14th, the 21st. You're like, oh, we still haven't got above there. And then you're into December now, mid-December. You're into late December, Christmas time. You're like, oh, it's still not doing anything that I want it to. I want to see it get above there. Then all of a sudden, oh, you get this January, the new year opens up and we blossom. The flowers erupt from the ground. So we finally get a break above that level on a close. And you go, sweet, if we can get a retracement back into this level next week, when that week closed, you go, ooh, if we could get back and tap that this week, I am long on this. Where am I going for? I'm aiming for right up here. I'm aiming for the premium box. Okay, I'm aiming for old highs as I go, and I'm aiming for premium box. Leave a piece on for there. So you go, oh, I missed it. Oh, it's leaving without me, leaving without me. Oh, wait a second. It comes back and literally taps you in right there. So at 19,944 on March. So you're looking at October, November, and now you're making a commitment in March to catch your trade. Okay. So March, you catch that high, you go, I'm in. I'm going to go long there. You go long. You wait for the next reversal. Wait for the next reversal. We don't get a body trade below that level. It freezes on there. Comes back through here, takes out the old high, and we keep marching higher, hitting our objective over here. Look at that, right to premium box. So box to box trading, within the course of that year, you had one trade you left on. You got in perfectly here at 19,816. You got out at that premium at 44. I don't know, that's what, 20,000 handles over the course of March 2023 till you got out in December 2023. So in the course of that 1 year, you made 20,000 handles. Is it 20,000? 19? No, sorry, 24,000 handles. I don't know about you guys, but 24,000 handles is quite huge. That's Bitcoin. All right. Perfect entry, perfect exit. So you say, oh yeah, I wish you, but can you show me that now? Can you show me that now? Let's go to a daily. Most recent. So we've taken out this high. You look for this here. Okay. Right there. And you say to yourself, oh man, I'm going to zoom in so you guys can see the importance of this. You're looking right here. You say, if we get a candle trade below this, after taking out this high, if we can get this candle close below here and retap this level, I'm looking for a short down to a discount array down here. And if I close below that, I'm looking for range extension. Again, you'll have to decide if that's your rule of trading. But here, it closes here on December the 18th, and you go, oh man, tomorrow, let's make it rain, baby. If we get some Christmas funds here, if that trades back up into there, I'm shorting this, and I'm going for my discount box down here, all the way down into here. So that whole little range right there, you go from $102,000 to an almost perfect entry, by the way, all the way down to the bottom of the discount box, which is right there at 97,000. So there's $5,000 of drop right there. And you go, oh, look at that. We've traded below this level on a close. So that's a little fair value. We trade below that. If we trade back into this, I'm going to get short, and I'm going to extend this range even lower. So it trades back up into it right here, and you extend the range below that low. You've already taken it out there. So there's a daily chart. Oh, Darren, it doesn't work on an hourly chart. I don't believe that works on an hourly chart. Okay. You don't think it works on an hourly chart? Let's see it. You see this change in direction. See how we don't get, you look inside this range here, you want to get a premium level. So if we trade below that level, we've already taken out the low already. So this doesn't, you can't use this as a valid return because you've already taken out your objective you'd be aiming for. So you wait. You got a reversal here. You wait for a body to trade below it. So it doesn't. It makes a new high, then finally trades below it. You say, no, if I can get back in here, I would go short there and go, I'd be aiming for low, mean threshold of this candle and old low. You don't get an entry there. You see a lows taken here and here, not here. Here's your reversal. No bodies above it yet. So you wait. Right here. A body's broken above it right there. Right there. As soon as the body gets above it, you go, ooh, I'd like to see it trade back into that. Now I'm going to go long, take out these highs, look for 50% of this range, and you'll see from there to there. Pay yourself an old high. It reverses on you, and you don't get your 50%. That's why you pay yourself at rejection blocks, pay yourself at old highs. Move your stop loss to break even, comes back, takes you out at break even. You got a small little profit above you. You wait. Some cool rules, man. Cool rules. And now you're back into a flat line. So can you do that on a 5? Let's do it on 1 minute. Let's kind of skip ahead this, which is what you're all kind of looking for. So market structure shift. Okay. Right there. We get a body trade above it. Yep. Now if we can get back here and tap into it, I would take that as a long. Unless you looked at that as an opportunity to get an opportunity to go long. That one did trade above there. You may not see that, but that's a trade above. Come back into it, take it for a long. Look for this candle to get taken out on the upside. It does. If it trades back into this candle, anywhere inside that candle, it's a long. There's your long trade, and that's a 1 minute chart on Bitcoin. And where are we aiming for? Premium array up here. This whole flat gap and that one there. Boxing. Tune into our show every morning. You'll know what I'm talking about when I'm talking about boxing. Let's go to something crazy like, oh, I don't know, Ford, or does this work on a stock? Does this work on Tesla? Does this work on all these other crazy ass markets. Okay, high gets taken. You look for this reversal. You see the reversal and you go, is this possible? Has he caught something here? Is this absolutely possible? If we trade a body below that level, can we trade back into it and get a short? Boom. Yep. Take out the low, discount array, take out the low range extension. We trade above this gap right here, trade back into that gap, look for range extension, takes out that high, takes out that high. You've got a small reversal, change back into it, going back down into that discount area again. You get small imbalances down here. Trade back up, you're beyond 50%, so you wait for a reversal to get you something that's more palatable. Reversal here, trades below it, trades also below this candle, trade back into that candle, short, discount arrays, little tiny ones down in here. Reverse, into it, inside that range, fair value gap, changes direction, trades below you, gives you one opportunity to get your trade off because you have to break even. You'll know what I mean by, even if you're on the wrong side of this, I can show you ways to get out at break even. You got to be smart, quick to catch it, but that's same kind of principle over here. A low's been taken, and you don't have to trust me. Just go through your charts and prove it out yourself right there. You literally open above it, come back, tap it, and then you start this whole run higher from May all the way up into a whole year and a half, 2 years, almost 2 years later. You're like catching a huge run up before you finally see the reversal. Box, create a new box, out. That's forward. Pick one. Let's go over into oil. Does it work in oil? On a daily chart. Does it work on a daily chart? Body trades through it, come back into it multiple times. Extend the range. You're paying yourself at 50% of that range. Use the fib tool technique I showed you. You're above 50%, so you purchase, you buy or sell a short, and then you buy it back at a discount at 62%, 70%, comes back, takes you out. Do the same trade over again, 50%, 70%, pay yourself, you're out. Comes back, do the same thing again. You've got multiple different things. You can just keep repeating that same trade over and over again. Okay? And you're obviously going to run all the way back through this range extension, all the way back down to the low. And then you get another reversal over here. There's a small little imbalance right here. You have to be able to see it. Body trades above it. You come back with precision. You hit it. And you come all the way back up inside this range to our premium level right there. Right to the top of it. Right there, you pay yourself box to box trading. So it works on a daily. Does it work on a crude oil 1 hour chart? Can we make this work on a 1 hour chart? We'll just take the most recent turn right here. Changes direction. Wait for a market structure break to the downside. If you can't catch this, if it runs through 1, 2, discount array, immediate rebalance, takes out the low, and then you go, all right, so now I've taken out the low. Either we're going to retrace back into this, or I have to look at the next larger part of the range. What am I violating here? So you've got 1, 2, 3 levels that get taken on the downside. The very last one that gets taken, which is this one, you trade back into it. Your short is there, anywhere inside this for a short. Looking for these lows here, and you'll get them all. And you would have caught like some massive dive down there. So even that big ass change up that happened on the Wednesday last week, you could have caught. I bet if we go down into here on a 15-second chart or a 15-minute chart, you'll start to see it right here. Look at that. There's the reversal. Body trades through it. Look at this. Look at this candle's wick. Do you get an entrance? On a 15-minute chart, you would have caught that massive run down that occurred on Wednesday right into the bottom of the week. Again, how you hold on to that, whatever your rules are, is up to you, but I'm showing you that there's a level of precision in here that you can enter the markets at that's unbelievable accurate. So anyway, you get my point. Is there another particular one you want me to look at? NVIDIA. Yeah, NVIDIA is just, I did this with Tesla one day. I took $100,000 account and just pretended like it wasn't actually and I just doubled down on everything. Just every time the next one comes, I just doubled down. Didn't take any profits out. Put 100,000. It turned it into like 170 some odd $1 million using this principle. And that sounds easy. It sounds like, yeah, that means nothing. It does mean nothing if you think about how you really trade. You really trade by this and this and this and this is what dominates your staying in or getting out of a trade, not the logic. I can show you clean logic here, but when you're in this and you're looking over here at that dollar sign and how much money you're up right now, that little greed thing kicks in and says either close out your trade, you're going to lose it all, fear, or you're going to say let's just keep letting it go, and then it turns against you. Say, oh, hold it, it's going to turn. Then all of a sudden you're underwater and you lost your money. It's all this shit inside your head. This is the easy stuff. It's not easy, but it takes a while to figure it out. But once you got it, you've got to get past this, the next most important or the hardest obstacle ever in trading, which is yourself. Anyway, let's go to NVIDIA. I like that. Let's try get rid of Walgreens here. I don't care about Walgreens anymore. NVIDIA. NVDA. Can this work on NVIDIA, you say? And so far we've been in the auto industry, we've been in oil, we've been in futures. Does this work in the tech industry? Oh, birds of a feather. We should stick together. Oh, right down to there. And that goes right up to there. So that covers all of this gap here, that gap. You wait for a body to trade below it, okay? So body, no bodies, no body. Oh, there we got a body trade below it. And then it goes, opens and taps it. You're short right there. That's a 1 hour chart. And you're looking internal range liquidity. I'm looking for box to box trading. I'm looking for the like array down here. And you literally go from 1, 2, 3, 4 hours later, or like it came all the way back up here, 4 hours. This candle, when it was all big and bold, I bet you were going, oh no, I'm on the wrong side of it. It's gapped up here. And then you chicken out. And then you realize it reverses and comes all the way down, box to box trading, internal range liquidity hunt, and it smashes you. You got to trust that level is going to hold. If it trades through, it's a different story. That's all about range extension. And I'll show you guys that. Come out to our show every morning and I'll show you what range extension is and what to look for. So it trades all the way down into your discount box. You hit it and you made a chunk of change over the course of 8 hours, 4 hours, move out. From there, it's 138.03 all the way down to 136. That's a $6 run from there to there, right? Or if you're pulling your fib tool on the way down, paying yourself on the way out, comes back in, give yourself another trade, start all over again. In 1 hour, you would have started that whole trade all over again, back down to your discount box, and move to the sidelines. That's a 1 hour chart. NVIDIA. We have a low taken. We look for this big ass gap right here. Right? You're going to go right to there. That candle's body to this candle's body. Trades above it, comes back inside, consequent encroachment. You're looking for running higher. Look for the premium array right here. It actually gaps above it, comes back in, taps it. So now you know that premium array for range extension. If it comes back into it, look for range extension, takes out these highs, and that's how you catch your, that wick alone right there is another trade setup. Tune in on the weekdays and you'll know how to get it. So that's NVIDIA. Any specific time frame you want me to look at on NVIDIA? That's a 1 hour chart, 15-minute chart, same thing. We look for any high. So let's look for, let's just do this. I'll close my eyes and I'll just scroll this back here. All right, and we'll start right there. Okay. And we'll go one candle at a time and you'll see. So you wait for the candle to finish. Now we've got, see how there's a little fair value gap forming right there? That BISI, we've taken out old highs. So this thing becomes important for me. What I do is it just go like this. And I go, now that becomes a nice little interesting level for me. It's a fair value gap. It's a BISI, buy side imbalance, sell side inefficiency. I've taken out an old high. So what I'm looking for here is a reverse to get back into this range. Or I want to see this get held support to go higher. Now I've taken out this high. I've got a graded response. And tune in on my show in the mornings. You'll see what I mean by graded response. I'm thinking about graded responses when I see this kind of thing happen with a fair value gap that occurs above an old high. Okay. So what I'm looking for now is I'm looking for something that comes back and taps this box as high and starts making a new high. Okay. So the high of the box, fair value gap, I want to see it tap that and go higher, all the way down to the consequent encroachment of that BISI to go higher. And then I lose my love for this trade as we start to eat up this BISI. If we start to eat through it and we close through it, now I'm changing my direction and I'm looking for this to run back down into this discount area 129-ish. Okay. So we don't get the immediate candle we're looking for. So we wait. It's about to make a new high. Wait, we can't get on this. It's left without us. So you wait. Oh, look, there's coming back. We wait. We just want something to touch the top of our box for an entry. So you got low leverage here, and you build your leverage till you get down to 1%, 2%, and you don't want to see it drop below that level. Otherwise, you're on the wrong side of the chart. Pay your loss and move to the sidelines. So right there, that's the little area I want to see price stay back in. Start loading on your trade, and we're looking for old highs. Did we get in on our trade? Right there. There's our trade entry, and we're looking for an old high, and we're going to move to break even, stress-free trade. So this trade doesn't cost us anything now. And now I'm just sitting here going, I don't care where this trade goes. It can keep going higher. I'm on it. I'm in this trade. As soon as it hits that high, I'm going to pay myself. I'm already at break even, plus the cost of my trade. Even if it comes back against me, I don't care. I'm see if I can catch this sucker for a nice little ride up higher. Look for that high at 134.84. $134.98. Pay yourself. Stop loss break even. You're in a zero stress trade, folks. Zero stress. You've just made some money in NVIDIA, and you're just going to sit here and see if it continues to going higher now, right? So you go, great. Carry on, my wayward son. Now I'd like to see price continue pushing higher. I want to see, and I'm going to wait. So there's different ways you can manage this trade. You can pull your fib tool in here, look for a standard 1, 2, 3, 4 deviations above this little range run here. If you stretch it out here like this. Okay. So you cleaned out that high. And this is how you practice on the weekends. comes back down, it takes you out your trade now. You've gone above your level, you've paid yourself at that high, and if it comes back and takes you out, you go, I'm okay with that. If it closes below this level, I'm on the wrong side of this trade, and it's just closed there now. So now you close out your trade. If your stop loss was sitting here, close out your trade in slight profit, because that's where we entered, right? Close your trade now because you're on the wrong side of it. That's a fail-safe candle. And you act on that candle when it's finished closing. And right now it's closed below that level, so you're out. I'm thinking this is going to come lower. And it does. It gaps lower into that level. So you'll be happy that your stop loss was closed off because of the fail-safe candle, right? Trades back into our box again. Now, if we can get back near this level, we'll take the trade again for a long. But we have to get above, this level here. So watch right there. See how we're stuck in that little box there for a second? This one here. You just sit in there. Did not trade above it, so we're still short. Wait. All these wicks, you wait for the decision to be made at the end of the candle, not during the candle's formation. So we're waiting. We break this low here now. Look for a reversal off of the consequent encroachment. 75% of this range here. You want to see a portion of this stay open all the time, back to an old low. Again, losing its love for me to go higher the more we keep dicking around inside here. You want to see this tap and leave. There's your consequent encroachment. So if you're on that trade now, I want to see a reversal. So if you see that hit there and you say, now I want to wait, and if I see this break this candle's close, like the fair value gap SIBI you see here, sell side imbalance, buy side inefficiency. If it closes above that and this candle, I'm looking for a long. If it just trades back into here and keeps coming lower, again, I've lost my love for this. I'm looking for a reversal back down into this little box down here. I'm looking for a discount trade over here. Okay, so we're sideways. Watch right there. No body above that level yet. Gotta wait for a body. It's one of the rules. Because that can get you in a bear trap. Yeah. Where do we head down to? Right there. You can't ask for more precision than that, my friends. That's box to box reversal. You're inside that box, short to box. Okay. So anyway, that's how you practice it. That's NVIDIA. That's in a 15-minute chart, trading NVIDIA. Okay. That's how you practice. Practice, practice, practice. And if you keep getting thrown off, keep practicing. Any other questions, Triple Q? No one? Somebody else wants to pick another asset class? I can show you on another asset class. Otherwise, I'll just go back into my weekly analysis of the markets. I'll go back and I've given you my idea of NQ, where I want NQ to go. So I will do a couple more analysis of some key levels of key charts I'm looking for next week. So if you're into ES, the S&P 500, Downside objective, a weekly. And upside. Okay. So looking for a reversal. We're looking for, if we do get a reversal here, looking for 50% of this leg and then 50% of the whole range created here. Puts us right back into it's last week's range, 50%. Those would be the upside objectives I'd be reaching for. And Dow Jones, it hit its downside objective I was looking for and went way beyond it. So what's our weekly look like? So good. Monthly, not so good. Yeah, pretty much puts the rest of that price leg completed. So again, looking for reversals, looking for opportunities to see reversals on the daily, 4 hour, 1 hour, nothing, nothing, nothing. Just starting to happen now on a 5 minute and on a 1 minute. We're seeing it already. So I see them occurring on the 1 and 5 minute. So if you guys see this reversing this week, you saw it right here on a 1 minute, 5 minute chart. After hitting those weekly objectives, you see it starting to manifest itself here. If we trade through that level on a close, we ain't done going lower, because now you don't even have any reversal. From a 1 minute all the way through to a weekly chart, you have nothing. It just says it's more downside, more ugly movements. Okay. So these are the levels I gave you on last week for natural gas. We're looking for this key level here, and it seems to be hanging on that. Broke down below this low. We're right on the low now. So lots of liquidity sitting below us here. And if we start losing that, 1948. 1948. $19.48. That's where I'm looking, right? Right around there somewhere. I want to see if that holds price now and continues to go higher. Copper. Look at copper taking a dive here. Broke below that level, came back into that level for a short. And I'm looking for downside copper. We're in precious metals now, okay? We're metals, minerals. I want to see price hold there on copper. Anywhere inside here, look for a reversal 1 hour, 15 minute, 5 minute, looking for a reversal on copper to run back into that range. Real estate still dropping. S&P's running for its lows. Oh, it's already gone through the low. I didn't see that part there. Okay, they're already through their lows. So S&P, you start losing this in S&P, you're in trouble. That's the downside I'm looking for S&P. TSX, the Canadian side of things. AGNC is finally taking out those lows. Finally got in the sticks that we're looking for in soybeans. Nailed it right on the money on Friday. Still haven't taken out that low we're looking for on the sell side. We're looking for the black line down here to go next week. Sugar, sideways. Coffee. Next downside in coffee, it's going to be here. Watch there. Live cattle. Look for this box down here. Okay. Cocoa. I'm looking for cocoa. Already in that one. So if we get above this level and this level, looking for cocoa to go again higher. Otherwise, I'm still looking for more downside in cocoa for this one and this one here. Corn, got nothing. Oil. Anybody into oil? Oh, my buddy Craig's into oil. He loves a nice oil trading. Remove all the drawings. Start again. It's upside. $62.16. I'd like to see you tap 62.16 and start going higher. I'll put that in here just so people can say, I told you so. And I like this. Potentially a bull trap that you're in right now because it's in a premium portion. But I do like this. I do like this. For a gold long. A gold long. I want you to look at this level. This is a 15-minute level. So we're not doing any of this hindsight shit anymore. We're just doing, we're reading it and what we're going to expect. Hang on to that idea. I'll be right back. I've got 7 of you in here. So gold, I'm looking for gold now as a graded response. I'm looking for gold to go higher, but we need to get above this candle. So keep this very much in mind that you must see this candle get closed on the upside for confirmation of more. So it needs to go climb above here. Needs to close above here on a close. Come back, use this candle all the way back to here. So the ideal kind of trade, if we were going to continue going along. Now remember, inside this small little, from that candle's high to this candle's low, we're already in a premium. So you want to trade back into this candle. If you use this as your opportunity to go long, and you keep an eye on this tomorrow or Monday, whenever you see this market open up here, watch that level. Put it on your charts in gold, because now we're up against this unknown here now, right? If everything we say has been true, then this should be our long. So you're looking for this level here. Any trade back into gold, into this level. If you close below this level on a close, and again, it loses its strength as you go further and further down. So your stop loss will be one tick below that low right there. If you start to eat through this on a close out the trade, wait, because look at this discount level down here. Look for a return back into this discount. Inside this range, you'll see that it's in the discount portion. There's 50%. Discount is in here. Anything above is premium, anything below is discount. Box to box. If it trades through this, it's running for here. If it trades through this, it's looking for range extension. Then forget everything I said about going higher. She's coming lower. So you just got to be prepared to stay on the horse. But this would be ideally a nice little tap on their institutional order flow entry drill for a continuation on the upside. I'd want to see it take that out. And you get more confirmation once we get a body break above this, that trade, skook them. As soon as you take out that high, pay yourself. Rejection block, pay yourself. Move your stop loss to break even and look for that next run above you. That's what I'm looking for. I'll even take that trade tomorrow if it comes back into that level. And again, it's all demo dollars. What you guys do with it is up to you, but that's where I'm looking tomorrow to see this go higher. And it loses its love for me the further it digs into this. I would like it lots if it just taps it and goes. I'm looking for sell side in Bitcoin. We finally ran below this level, coming back inside this level. If we close above here, I'm looking for here. If we roll over and come back down, I'm looking for this low and this low, these equal lows below us here. But we got to start getting down below this and use this as support to come lower. Michael Saylor is gassing my Bitcoin bags. I don't know what that means, Duke. Sorry, buddy. I have no idea who Michael Saylor is, and I have no idea who what gassing your bags is about. Where do we see Nvidia going right now? Got nothing for you on an hourly or 15-minute. What's an hourly look like? Cheaper. There's guys are really taking a dive down, hey? $1.45, and we're already down to 94. It's like half their stock already. 40, not half. 50%, 40%. 40% of the stock has dropped already. That's a sizable drop. What's a daily look like? That's my downside objectives for NVIDIA. If anybody's interested, $82, 84 to 79, 80. He's buying a lot of Bitcoin. He's the CEO of MicroStrategy. Oh, okay. Bitcoin usually went up on the sell off because he's buying it while the indices are crashing. Wow, he's buying Bitcoin, eh? Huh? You can keep buying it down here at 81,000. I would not buy Bitcoin. I'd trade Bitcoin, but I wouldn't buy it. It is way too volatile. I'm in agreement with Mr. Buffett. There's nothing tangible to hold on to there. So if this Sawyer guy gets rich off this, no logic to me, man. I don't see any I just see hype over some non-tangible Bitcoin. It's like tokens, NFTs and that shit. I don't get it. Anyway, look for that level. We drop below this level one more time, pop into it. I'd like to see that continue on the downside here. If we close above this level, look for this level. And if we close above that level, look for these equal highs and that level right there. I buy it, but small amounts. People have a hard time wrapping their head around Bitcoin because it combines two things that people have difficulty understanding: technology and economics. Yeah. I love trading it on here. On the weekends, I like to, if I've taken some hits on my demo account because of some stupid choices that I've made, I'm not following my rules. It's 99.9% of the reasons why I'll take a loss. I don't follow the rules. You got to follow the rules. You can rebuild your account in here. Bitcoin's great for that because it's 24/7. So you can trade it constantly. So if you're going to trade this internal range liquidity run here, back to this level, that's the premium box right here. You got to get above that little level right there. On a close, 83,131. If you close above 83,130, 143 on a close, look for that level. Look for that level. Any questions with any of this stuff? Is there anything you want me to look at specifically? Oh, so even you grapple with that sometimes. Yeah, the impulsive trades work out sometimes, but they reinforce bad habits. Yes, they do, Duke. They do, my friend. They do. I grapple with it all the time. I grapple with impulsiveness. I grapple with an inability to just sit and enjoy the markets instead of panicking over, I got to be right, got to be wrong. None of that shit matters. It really doesn't matter. If you just wait and you develop patience and you develop discipline, you can see these trades. They're very, very simple trade setups. And if you're wrong, you just put your stop. You just know that if it trades through that level, we're going to take the low. Follow that rule. Just a simple rule. For range extension, the rules for range extension, I'm going to do videos on that. I think I'll do a video. Maybe if tomorrow my wife gives me a chance, I will do a range extension. Here's the rules around range extension. And I will actually put the rules up here as I see them. And how to trade internal range liquidity. Here's the rules. I'll type them all out so you get to see them. And you got to follow every single one of those rules. And if you if you don't follow those rules or you make them flexible for your own enjoyment and you get beat up on it, you'll know why, because you violated the rules or you got soft on your rules. You must follow the rules. And I'll give you examples of that, why you have to follow them, and where they fail. We use hindsight, and we'll use hindsight as proof of what we're expecting in the future. If you understand hindsight and you understand candle by candle, you will understand. We'll actually put it into a practice. We'll follow the rules. We'll scroll back and we'll treat this like it's a live chart, and we'll go, where do we expect it to go? Let's follow our rules over here, and we'll see it. We'll test it out to see if it works. If you guys are interested in that kind of thing, I'll try and put that together on the weekend or tomorrow. If my wife gives me another hour or so, I'll try and do that for you guys. So it only took like a $15 paper cut. Okay. As long as you got out, because you got out, you saw the price shifting in the wrong direction, and you didn't get out because that one candle started moving against you, wait for that candle to finish and make your decision. It's no different than when we do this and we scroll back and we wait on that candle and we make a decision. Imagine that candle's just finishing. Now make a decision. Now make a decision. Now make a decision. And you make your decisions based on the close of that candle real quick. You make a decision before you do it, and then when it closes, you go, now can I execute something? No, I have to wait. Can I do anything? Nope, wait. And while it's forming, you're saying, can I do anything here? No, I'll wait. Can I do anything here? Yes, I can. If it comes back to this level, I'm going to take that level right there, and I'm going to go long on that if it hasn't taken the high. So you go, ooh, look, they traded right back into it, then traded below it. So if it trades back into it, you'll get out of that trade now. That's the rule. Trades back into it, get out of that trade, you're on the wrong side of it. Right? So you're following this. It's just going to be a simple rule-based technique. We're on the wrong side because we're going lower. And look at that. So you can see that happening long before it actually happens. Anybody else have questions, or if there's anything specifically you want me to look at, any assets you want me to look at, I will look at them quick, and then I'm going to call this quits. I'll end this here, and then I'll see if I can put one together again tomorrow. But basically, you've got my ideas of what I'm looking for. Today, tomorrow, a couple of things I'm looking for. Those are the next 3 candles I want to see on an hourly level. Or is it a 5-minute level, 15-minute level? I think it's hourly. Anyway, I'm looking for upside. We've got the 5-minute reversal, and we've got the 1-minute reversal, and the 15-minute. We haven't got the 15-minute yet, so we've got the 1 and 5, no 15. Wait for structure break. That's what we want to see. A nice little structure break up here on the 5-minute, and then continuation. So inside internal range of liquidity, this is a nice little run inside this range here. Gold and oil. I gave you the gold and oil already. I like gold right here for a continuation. Watch for this level above you. You're already in a premium, so coming off this candle's wick, half that wick is, you don't want to see more than half that wick go. I don't want to see more than 50% of this BISI get taken in a wick and then go higher. So I'm looking for this to go higher, and tomorrow I will be trading this. I'm actually going to take that trade depending on where it opens, and I'll take that trade for potential upside if it trades back into a level I like. And that box right there has piqued my curiosity. That's gold. Oil, oil will be, as I mentioned earlier, I like to see 62.16 get retapped. 62.16. Yeah, 62.16. I like to see that get retapped anywhere down to 62 or 61.84. 62.16 to 61.84 on the downside. Tap it. Then I want to see it go higher. It's got to break this market structure here. This little up close candle here. This bullish candle. It's wick. It's got to take that out on a close. And we're coming back into this range. Take that candle out, find support at that, and go higher. So you're just inside this. If you really want to see oil bust out of here on the hourly, it's got to start getting above these relative equal highs above you here. With just internal range liquidity hunt. If you're doing a quick little run, you see it come down into here. Be real careful if it starts trading below 62.84 on a close. Move to the sidelines and wait for something significant to happen, because right now it ain't happening. That's what I got for gold and oil. Any questions? Anything else you want me to look at? Anybody else want me to look at any specific asset class? Just ask. I'm happy to do so. And then if not, I'm going to close her down, and I'll see you guys on Monday. Platinum. Jeepers. Platinum. What is that? What's the call sign on platinum? What's the ticker? Platinum. Platinum. PL equals F. PL. Platinum futures. This one here. May, April. I gather it's this one. Holy shit. Hello. Not too bad. I'm just going to extend this one to the right here and see where that takes us. Okay, if we get a retracement back into this level, I want to see this hold price now and start coming lower. If it takes this out on a close, then look for a run back into this range. That's April. It might be a different one. Big OPL. That looks a little better. That's a tricky one. Let's just go to PL futures without the contracts and see where that's in a continuous. Yeah, you look more down. Look at all this liquidity sitting below you here. If you come back into That's how far you can come back into that on a daily. You come back into that Duke anywhere inside there. You can wick all the way up into here. You start to use this as support. I'm looking for another run back up inside this range where you see this abrupt reversal. You could see this if we get above here on a close. Look for this as support to go higher. Otherwise, I'd like to see that just bounce off of the bottom, consequent encroachment, high of that, wick at the most, and then come back down. Take out these lows. Look for range extension now. Yeah. Yes, indeed. Anybody else? Anyone? Any other questions? Anything else you want me to look at? So if you do take out that low, look for a reversal on the 1 or 4 hour chart for a run back up to the premium level up here, $980. Anybody else? Nope. I'll give you 60 seconds. Anybody else want me to look at any specific asset? I will be more than happy to do that for you. If not, I'm going to wrap it up here and go enjoy the rest of my weekend. Apple. Apple, Apple. Mm-hmm. 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 Apple's downside down here. Mm-hmm. Right to the back to the breaker right here. 8. The next immediate downside is probably here. And then after that, if we take that, look for this. If we take the breaker on the downside, come back into it, like at 180.66, look for that to continue coming down lower into here. 180.66, those are the kind of levels I'm looking for. 180.66 right there. So if we trade through this level, come back into this level, between the sticks, look for continuation on the downside. If we come down to the sticks and bounce off the sticks and go back higher, perfect. If not, we start to work through those sticks and use the sticks to go lower. We're looking for that downside objective there. And if you close below that, we're running the lows out here. Okay. Yeah, we've got only 2 time frames that support a reversal right now on NASDAQ. Otherwise, I got more downside for NASDAQ. But because it's hit a higher time frame PD array, I'm looking for some little measure of retracement from Monday, Tuesday on the week. And if you just look at like this trade here on the last trade of the day, of the week, I took these 2 in here and took it long off of this level. Right out at that level right there, the premium array. hit it right there. And then we get the reverse continuation. So it's a quick internal range liquidity hunt. It's a nice way to end the week. One more little trade. I traded all these little tiny lower time frames, up and down, up and down, up and down, and then finally took the last two for a closeout up there. So right now on the NQ, all we've got is 2 time frames that support a reversal. They're the lowest time frame, so we'll see where we go from here. It'll all determine on the gap and the close of Monday's candle. Yeah, I'm doing the same principles that I'm teaching you guys every morning on our show. Same thing every day. I give you these kind of setups for trading. So no other questions. I will thank you guys for turning up. 9 of you, 10 of you sometimes. I appreciate it. I know it's not full of crazy pomp and pageantry because markets aren't moving, so but you get an idea. I gave you a little bit of teachings as long as and also a little bit of where I expect to see the charts going. So I hope you got something out of that. Thanks for turning up. And as usual, send in the love, my friends. Send in the love. Take care of each other out there. Be kind to one another. And I'll see you guys maybe tomorrow or bright and early on Monday morning. Thanks for tuning in. I'll see you soon.